proceed with the company background first. As you can see here, this is the company background. Sunway Berhad was established in 1974 by Tan Sri Datuk Sri Dr. Jeffrey Che, who is the founder or chairman in the Sunway Berhad. Sunway Berhad also is a Malaysian conglomerate company that involved in various activity in industry. For example, their two core business is development and construction, or we call as multi-industry company. It was listed at Bursa Saham Malaysia on February 1984. The headquarters of Sunway Berhad was stated in Sunway City, Subang Jaya, Selangor, Malaysia.
I will continue with vision and mission of Sunway Berhad Group. Let's go through with the vision of Sunway Berhad. To be Asian model corporation in sustainable development, innovative to come to point of life for a far better tomorrow. Then, the mission of Sunway Berhad are to empowering our people to deliver and enhance value of all stakeholders, embracing sustainability to our business process and decision, and the last one to be attracting and nurturing a talent and progressive workforce for a digital era.
Next, we go for the Chief Operating Decision Maker and its responsibility. The first one is Lee Chuan Seng as a Chief Executive Officer under Quarry Division. In 1996, he joined Sunway Quarry Industry as an accountant and now served as Commission Manager in Sunway Pioneer Joint Venture. He is in charge of three core products, which is aggregate, asphalt manufacturing and ready-mix concrete. He then became a financial controller in Setia Juta Industry, where the company inject into the Sunway Holding Berhad. Second, Yeo Yuan Chi as a Chief Executive Officer under Trading and Manufacturing Division. His responsibility is to identify a new market and model business reputable legacy line and overseas expansion of Sunway enterprise. And he is also transforming from a pre-quarry equipment and accessory supplier into a full-fledged heavy equipment.
The next Chief Operating Decision Maker (CODM) is Mr. Danny Ng Boon Liang. He stands as a Chief Executive Officer under Department of Building Materials Division. Mr. Danny was the Executive Director of the Sales and Marketing Divisions of Sunway Building Technology and Marketing Divisions of Sunway Building Technology Berhad. And he currently oversees the Building Materials Division, which includes the interlocking concrete pavers and compressed concrete slabs, vitrite, clay pipes, and jagging pipes and spine piles formation. The last Chief Operating Decision Maker (CODM) is Mr. Chan Hui Chuen. He is appointed as the Chief Executive Officer of Sunway Shopping Malls and Theme Park. Mr. Chan is currently Advisor of Malaysia Shopping Malls Association (EPK Malaysia). He also serves as the current Advisor of Council of Asian Shopping Centres (AASC).
Now, I will discuss type of business segment. There are 8 types of segment in Sunway Berhad. Sunway Berhad is based investment holding company. This segment include property development, property investment, construction, trading and manufacturing, quarry, healthcare and others. Move to geographical segment. Sunway Berhad based not only in Malaysia but also in a few countries such as Singapore, Indonesia, China, Australia and others.
The 10% threshold test is being tested to identify the reportable segment and non-reportable segment. 10% of threshold test is revenue, profit and asset. If it is more than 10%, then it is a reportable segment. For Sunway Berhad, the property development is reportable segment since it is 26%, which is more than 10% threshold test. Calculating the threshold is total revenue 1,350,744 divided by the total of 5,194,949 times with 100 is equal to 26%. The next one is property investment. It is reportable segment 2 since it is 16.20%. The calculation will be the total revenue of 841,435 divided by the total of 5,194,949 times with 100, it will equals to 16.2%.
For the construction, I will take the total revenue 3,011,270 divided by 5,194,949 ringgit and I will get 57.96%, which is more than 10%. Same goes with the manufacturing and trading and others. This ensures that it is reputable segment, so they succeed the threshold test. While for the investment and the quarry, they is lower than 10%, so they fail the threshold test.
To ensure the total revenue come from reportable segment, it must be at least 75%. So the calculation will be the total external revenue from reportable segment will be divided by total external revenue by all segment. It will be get 75% or higher than that. If the total revenue does not meet 75%, Sunway Berhad need to identify more reportable segment until it gets 75%.
Move on to calculation of segmental report 75% rule of Sunway Berhad. As to be shown here, there are 5 reportable segments that are separately disclosed, which is property development, property investment, construction, trading and manufacturing, and others. Meanwhile, quarry and investment holding are recognized as non-reportable segment, as in fact it failed to meet 10% threshold requirement. As a result of the math of total external revenue of reportable segment divided by total external revenue of all segments times by 100%, Sunway Berhad will get 141.07%, which is more than 75% requirement.
I will present about the company's performance of advantage and the disadvantage. First, we have the better decision making. Companies can make smarter decisions on whether to reallocate the resources. Second, we have the separate profitable segments. It allows for the identification of lucrative areas within the business. Third, we have investors' understanding. The investors can gain deeper insights into our company's operation, risk and growth. The disadvantages are investors' confusion. The abundance of segmental data may overwhelm the investors. Second, we have the complexity. Managing and reporting a multiple report of segment can add a layer of complexity and a burden to the company.
Next, for the basis of interim reporting performance, they use FAR570 interim financial reporting and based on paragraph 9.22 Bursa Saham Malaysia that listing requirement. For the FAR570, they prescribe the minimum content in the interim financial reporting and the principle for recognition and measurement in the condensed or complete financial statement of the interim report. Next, in paragraph 9.22 prescribe, it must be prepared quarterly basis and it must be released as soon as possible after it get approval by board of director and not less than 2 months after the quarter at the end of their financial.
Let's go through with the accounting policy. Accounting policy and method of computation adopted by this group. Interim financial report are consistent with this adopted in the annual financial statement for the financial year ended 31st December 2023, except for the adoption of a following new MFRS and amendment that are effective from 1 January 2023. First, MFRS 17, Insurance Contract. The group had previously designated and measured its financial contract given to the third parties and financial institutions in respect of trade contract and credit facilities as insurance contract in accordance of MFRS 4. And then, an entity which had previously applied MFRS 4 to its financial guarantee contract are given the irrevocable choice to apply with the MFRS 17 or MFRS 9 to such an insurance contract on a contact by a contact basis. Second, MFRS 101 disclosure of accounting policy. An entity have to present fairly the financial position, financial performance and cash flow of an entity. Company need to disclose their material accounting policy information rather than to disclose their significant accounting policies.
Time of interim report. Sunway Berhad prepare condensed set of financial position. The report include statement of financial position, statement of profit or loss, statement of changes in equity, and statement of cash flow. Sunway Berhad also prepare quarterly, which means 4 times a year for every 3 months.
Moreover, about the period for the current and comparative of each statement prepared by the company for the statement of profit or loss using quarterly, that is 3 months ending starts from January to December. The current interim report is using the current year, while for the comparative will be using last year.
For adjustment 1, we can see that there is a transfer from MFRS 140 to MFRS 116. So, we can debit to PPE 550,000 and credit to investment property 550,000. Adjustment 2, we can see that the company issued 4,790,000 units of new ordinary shares amounting to 260 ringgit per unit. So, for the working, we just multiply it 4,790,000 to 2 ringgit 60 cent. The total of it will be added to the share capital after the adjustment.